Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 8th of September. It's showtime. Well, that's showtime tonight anyway. Tonight at 7 p.m. Eastern Standard Time, all eyes will be focused on President Obama and his speech on creating new jobs in America. This is probably going to be one of the most important speeches he will ever give, and it could mean the difference between him keeping his job or losing his job in November. So what will this mean to the markets? So far, President Obama's words have not helped the markets in the past. It remains to be seen what is going to happen to gold, the equity, and futures markets after the president's speech. In after-hours trading tonight, you will get an early indication as to how the markets interpret the president's speech. As always, we rely on our trade triangle technology to show us the way. That's important. Now let's go to the 6 markets we track every day and see how we can create and maintain your wealth in 2011. So here we are at my home page, and we're going to go to my portfolio manager, and you'll see the 6 markets we have, and right here you can see quite clearly. So here's basically how this works if you haven't seen this before. Basically it's the exchange, where the data is coming from, the ticker symbol, the name of the particular market that we're tracking, and also the open, high, low, live. Now you can grab these and change them. It's pretty cool, very simple to do, and you just move it around at will, and it just works. It's just very, very easy to do, and that's one of the cool things about MarketClub's portfolio. Under the score, you have, obviously we can score these. We can just click here. It rates them all very clearly, tells you 60, 60, 60, 75, or if you want to go the other way, it'll put them on top. So it's really just dependent on you and how you want to move your data around. Then to the right of that we have a blue little square, which is the chart. Then we have Smart Scan Analysis. It'll analyze any market for you instantly. And then here we have downloads. You can actually download the data if you want to run it through some spreadsheets that you have. All very easy to do. So let's go to our first market, which is, and if you want to move it also, by the way, yeah, I can just grab the indicator right here and just push it up to the top, or pull this down, whatever you want to do. Very simple to move these around, and I think that's what you'll really enjoy about this product. So let's just go to our first market, which is going to be the S&P 500. And you can see right now, we talked about this yesterday, and I'm going to put my illustrator on it again to show you one of the markets we were looking at in terms of the indicators. And I think really this formation, we just simply drew a line this way and this way, and basically we said this is a flag formation which should end, and the prices should go down this way. So you have the move from the highs here down, extended flag formation. It's a continuation pattern to the downside. We'll have to see how that works out, but again, you've got our monthly trade triangle negative, positive, yes, negative right here. You've got our weekly is positive and the daily is positive. Now you want to put more emphasis on the longer term, especially with equities. If you're an intermediate term trader, you should be out of the market right now, but if you're a longer term trader, you should be either short the market or you should be looking to get short the market, or you should be out of the market completely. Depends on your risk profile. But again, the formation, how we market and how we trade this market is going to depend on what we see. I think the market's going to just do what it did here, and that's sort of rollover. I think this is going to roll over again to the downside. So let's see how that works out. Let's clear the screen and go to our next market. And the next market we're going to look at, go back to the portfolio, is going to be the silver market. And we look at that silver market very carefully, and here's the silver. Actually, silver's putting in a pretty nice performance so far today, and it has really performed very well, much better than in gold, as a matter of fact. And we are still in this sort of basing period We haven't really got this market to go higher, and it hasn't gone lower. We've had the pullback, but coming back like it is today. And one of the things I like to do with MarketClub, or when I'm using MarketClub, is to go to some of the various, tend to be the line graph and the candlestick charts, but there's also a classic Western chart. You can see that sometimes people like to look at those charts. I've tended to grown away from those and have gone either to the candlestick charts, which are much more informational, and also to a just simple line chart. So here's the line chart, and you can see basically where it just sort of, even the pullback didn't alter the overall picture. You still have a positive weekly and monthly. Only the daily is a little bit negative, but again, don't put too much cause into the daily. It's very, very short term, but the longer term, it looks like we can see this market improve. So let me go back to our portfolio, to our next market, and that's going to be gold, and it's gold spot. And just very simply, it's a 75. Click here. We're going to go to our candlestick chart to see how easy this is to do. And the other thing which you can do as well, which I like to put sometimes on for some of our students who watch these markets, is to look at our studies and to put the parabolic stop and reverse, the PSAR, the SAR it's called, developed by Wells Wilder. It's a very good indicator, and you can see what it's supposed to do. So it's supposed to get you out of the market, into the market, and here you can see we got back in the market, or the SAR got back in the market, not us. We were already long the market, but there's your stops. You can move the stops up. Right now they're scheduled. You can see the stop is right here. That's where you would look for it. So you go under the daily price, you see the stop is at $1,777.36. So that's where you'd have your stop today. And they tend to prove to be pretty effective. The one concern I have a little bit on these markets, in particular gold, is the fact that we did make a new high, but we really didn't see a new high on the Williams percent R. A little bit concerning, but the greater concern I have, of course, is the negative engulfing line. Let me just put my telestrator on to show you that. So what we'd be looking at, the negative engulfing line would be right here. And let me just click there, and it's this line right here. As it engulfs the previous day totally, that was confirmed yesterday with the sharp down move and close in gold, indicating that this is, at least for the moment, a temporary top. And what is even greater concern is the potential that it's a double top, like here. And if we get that, then I think we're looking at this market as potentially have made a top for the quarter. So not sure if that's ready yet. We don't have enough. We need more data. Of course, if the market comes up here and goes through the top of this 1920 level, then I think it's off to the races, and we'll see the 2000 2100 level hit pretty quickly. So let's see how that plays out, and go to our next market. So let me just clear this off the screen. And the next market we're going to go to is crude oil. And here it is right on the very top. And crude oil is right up against this 90 level, which we talked about. You'll see in our comments what we think is happening. Two things. One is you've obviously got resistance at this 90 level. If we close over that, then I think it's a different pattern. But if we close down, it was down early. It sort of rallied back here as we're doing this. We're in a 60 mode, meaning it's a trading range. And with trading ranges, you want to use the Donchian trading channels as well as the Williams percent R. You can see the Williams percent R here is really a little bit extended to the upside. Now, if we close down and we don't make a new high in the Williams percent R, it's a little bit of a potential negative divergence on that indicator, meaning we could see a further pullback. But clearly, the market is doing similar market action to here. It's trying to go higher, but it just doesn't have that. I'm going to look at the longer-term trend of the monthly at 96.56, indicating that we should probably be at or near a high. Now, not to say it can't bust through here, but the chances are, with a overbought situation at the top of the Donchian channel and the major trend negative, it would indicate that we're probably going to see some sort of a pullback. Of course, a lot is going to depend on what happens this evening with President Obama's speech. Technical analysis really is a wonderful tool. It can make a lot of money for you, but obviously there are some things that come out of left field that can skew things, but generally speaking, go with the trends and you will make money using MarketClub. So let's go back to our next market, and we'll be looking at the dollar index. And this is putting in a very, very good performance. We talked about this market yesterday, and I'm going to scope this out just a little bit further. In fact, let me go to a line chart. We talked about line charts earlier, but let me go to scope this out. And let me just, all of our triangles are positive, which is a very good sign. Let me take out the Donchian trading channels and the parabolic, and it's easy. Just click here, then you click right there, and it's done. How simple is that? But if this market, and I just want to draw this out with a telestrator to show you, if this market has actually created what we consider to be a potential energy field, the key thing in my mind is to get the market closed over this level, and that's the 76.10 area. Now we're currently trading at 76.06, so we're very close to that area. If we close in new high ground, like let's say we close up here somewhere, then I think this energy field, I'm just going to name that so we know where it is. I just spelled it incorrectly, but it's my dyslexia coming in, but that's I know how to spell it. But this is the energy field, and it is really sort of building. And if we see the market close over the 76.10 level, then we'll see this market go higher. We could see it go all the way back to 80, which is a big move. Now this is the index. This is not the against the euro. It's against a basket of currencies. We've talked about this before. So again, I think we're going to see this market move higher, and we'll go from there. But again, this is something we're pretty interested in following. It's been very, very kind of going nowhere for a while, but we've got all our trade triangles are positive, and it looks like we're going to see this market go higher. And we are looking to see this. I've got to do this because it's driving me crazy. See, I do know how to spell it. So this is going to go here. Yeah, ignore this, my mistake. But it's an energy field, and we think it's going to propel this market much higher, which is obviously very positive for the US dollar. So let's clear everything off the screen and go to our final market. The final market we're going to be looking at is the CRB, and I'm going to put it in my portfolio. And let me just 1 second. Hold on. How can I do that? Alrighty. Doing this broadcast is a little bit tricky because I just can't get back to the very bottom of my portfolio. But anyway, let me see if I have it in another portfolio so I can move it here. Well, pretty much what we're looking for in this particular market, in the CRB index, we're looking for this market to be longer term buys, but it looks like it's testing the Donchian trading channel, and we expect it to come back down. Sorry about this, a little bit of a technical problem. We're doing this live, so things can happen. But let me just see if I can get this. Yeah, there, I'll do it this way. I know I can do it, but so all I have to do to get this index is type in the CR, and it should, there's the index right there. All I have to do is just double click on that, and that'll put it into my portfolio. There it is, and we'll take a look at that right now. Now notice the number is 60, which is a trading range, and I think that's the important thing to look at right now is the fact that we're up against this level, and if we put our Donchian trading channels in, which we talked about before, and we can put the parabolic stop and reverse in there, so you can see that we're very, very close. Actually, with this, it's saying that you actually had a sell signal on the parabolic, and this is really what I wanted to show you. Let me just get a chart, and we'll get a little closer because we're a little far out here. Let's get a little closer, maybe a month or so, and you can see we kind of right up against this resistance level. 40, I think 343.20 is a major resistance zone, and that's going to stop the market, at least for the time being. Also, we've got to watch this Williams percent R. So we've hit the top of the Donchian trading channel a little while ago, and now we're sort of coming back. So I would pay close attention to this. But look at follow the dollar very closely. Tomorrow is going to be a very important day, a very busy day because of what President Obama is going to say this evening. So I'm sure a lot of traders will be watching that. And then tomorrow is, as I say, it's going to be a totally new day. And I'm going to, with that, sign off. It's been fun. I'll talk to you tomorrow. Adam Hewison from Market Club. Have a great day. Thanks for stopping by.